This is our Forex blog for March 24th, 2011, and like most days we want to see which currencies are strong to buy them against the currencies that are weak. The dollar has a weekly and monthly trend that's down, so preferably, if you see the strength ebbing out and starting to become weak, around 4, you would see the daily, weekly, monthly trend down, real-time trend down for the first time. It's the weakest it's been all day. And usually when the weekly and monthly trend's down, it's only a matter of time, usually a half an hour to 3 hours before that weakness is likely to continue. So at 4 o'clock, you'd want to find a currency that had a longer term trend that's up. The Australian and New Zealand have a weekly trend that's up and the monthly trend that's down. The euro had a weekly and monthly trend that was up, and at 4 o'clock it was strong. The last few days the pound has been a lot weaker than the euro, so seeing some strength come into the euro, it makes sense to look for buys after 4. And notice, at 4 o'clock the market had come down to a Fibonacci area and found support. It didn't have that much statistical weakness. It rallied back up, came back down again, and actually during that time other euro pairs are going up and dollar pairs are getting weak, and you might have bought this when it went back above the previous day's low right here. If you didn't get into that trade right here when it broke from underneath above the hourly, that's very bullish. A lot of times these are false breakouts. It breaks out, comes back down, and then continues its previous downtrend. When it's underneath the hourly, it's more likely to go down. When it's above the hourly, it's more likely to go up. So kind of just wait a little bit here, and when it wasn't able to resume the previous intraday downtrend and broke out again, you might have bought this little breakout right here. You have the monthly R2 pivot level right here, which is your first profit target, and you also got a counter trend triangle. The triangles oftentimes are the end of the moves. So this resistance area here, it didn't have off the chart strength at the time. You might have got out of your trade, and then you had a nice little pullback right here. Anytime you see a market trending up, draw your fibs. Fibonacci areas are phenomenal for getting into counter trend moves. And this one basically pulled back to the 38% Fibonacci retracement, our counter trend buy signal in the direction of the trend. And on the way down, you can see there wasn't a whole lot of weakness. Our new tool is called the FX Momentum Pro. Let's add this to the chart. And this lets you see what the euro is doing against other pairs and what the dollar is doing. Let's take the trend intensity off of this for now. And you can see, earlier in this move right here, just incredible strength in the euro, a lot of weakness in the dollar, which caused this move up. And that added to the probability of this trade right here, because you can see extreme strength on the way up, and as it was going sideways and pulling back a little bit, other euro pairs really weren't getting that weak. And when you got back into this trade right here, notice again strength in the euro came in, weakness in the dollar, and it pushed it up. Same thing with this pullback right here that it had. Notice it had a lot of strength on the way up. This pullback went down with mild euro weakness and mild dollar strength. We had a counter trend buy signal right here. Notice on that previous bar other euro pairs weren't going down, almost nothing at all. And when it took off over this bar's high, you're in, and this is telling you in real time this is a very significant trend. It's the strongest euro up momentum in the last 3 hours, and it's likely to go higher in the next bar or two. Again, it makes a higher high. The momentum is slowing down a little bit, but you're already up 20 something pips. You might want to move your stop up underneath that 2 bar back low. And notice our IntelliTrend bar is dark green, which is showing a lot of strength. So you might have got out of your trade there, somewhere up here when it went sideways around 30. You're in this thing around 15. You made 15 pips on that trade, and because of this momentum, you want to compare the down move. If it pulls back with very little weakness compared to the strength, it starts to go back up again, you might buy the breakout of those 2 bars high. You're back in here, your stop's underneath your low, and you want to watch it. Now look, it's likely to break out through the high because of the momentum. It doesn't always mean the next bar is going to go higher, but most of the time it does. And when it does go higher and you see a lot of momentum on that bar, you know that other euro pairs are also getting very strong for that time of the day. And boom, there it goes. And again, extreme momentum. Now what I would do is, because it's now above the upper containment band, draw my fib off that last wave like this. This was the last wave up, and when it gets to that fib target, that's a good place to at least get out of half your trade. So you're out of half your trade right here. Notice on that bar the momentum kind of slowed a little bit. You're in this trade around 30, you're out around 70. It's a 40 pip move in about 15 minutes, and you might trail your second stop, maybe put your stop at 41.55 or 60, because you don't know if it's going to continue higher or not. It's trying to go higher, and usually the 1.618, the next fib target up, is where it's going to end. And it appears that there's a retracement level right here. I would tighten my stop right underneath the low of this bar here around 68, and it continued up again with a lot of momentum. It's way above the upper containment band now though, so don't be greedy. We're coming up to 4,200, which typically has lots of sell orders. This is our trading zone, likely high based on the statistics, but the momentum is strong, so if you want to hang on one more bar you can. And it continued up again. 4,200 is likely the end of the move, but again there's still a lot of momentum. And it went to the next trading zone area and kind of stalled. I'll be out of this trade around 42.05. But we're in that trade at around 30. You made about 70 pips on half, and if you wanted to get out at this first fib target on the second half or the first half of the trade, you did. Notice the market really didn't go much above that second or that next fib target up here. Counter trend sell signal as well. Now the pound, extremely weak earlier in the day, or actually most of the day, but the dollar was also weak. So you're better off trading it against a currency that's strong. For instance, like the euro dollar. Let's put the euro pound on here. Strong euro, weak pound. It's very likely to go up. And you can see that's exactly what happened. Just took off and just trended the entire day up. Now I don't like to buy significantly above the upper containment band, but every once in a while, maybe 1 out of 6 or 1 out of 10 days, you have currencies that go above the upper band and just continue. Most of the time when they go outside the bands, they pull back. So when you see incredible momentum like this, that trend could continue. When it goes above the band like this with less than extreme strength, you can see the white line shows extreme strength. This had less than that, and as it was going higher, notice it was going higher, but the strength was actually falling off a cliff. Very big reversal pattern. The Swiss also had some strength today, but the weekly trend's down, the monthly trend's up. The Australian, the daily and weekly trends up, so you could have sold the weak pound against the Australian. The pound Australian was likely to have fallen a lot today, and as you can see, it really did. It fell hundreds of pips. It's underneath the hourly. When it pulled back up here, you can see extreme weakness right here, and it broke underneath the previous day's low. You might have gone short right here, and it just went right down to the next support area down here. It's a 100 pip drop in about an hour. So the currency meter is excellent, especially on trend days like this. CAD also very strong today. However, the weekly and monthly trends, down. I preferably look at the weekly trend. So you certainly could have traded, the pound CAD by selling it as well. However, keep in mind that recently the CAD has been getting weak, so it's not the best trade in the world. But the real-time trends, weak versus strong, usually are enough to cause some decent moves. But it's always, higher probability, less risky trade when the weekly and monthly trends line up, which in this case it didn't. But you can see, looking at the pound CAD, this one also fell like a rock, and when it's underneath the lower containment band, usually it doesn't go that much more down. This one did go down another, it looks like 50 pips or so, but earlier it was showing a lot of weakness. We have lots of support right here. And when it broke that support, the next area of support was right here, about 50 pips down. So that made a good sell right there in this particular pair.